afternoon, everyone. I was thinking, is it morning, afternoon? It is afternoon now. Good afternoon, everyone, and welcome to Money Smart Week, Friday of Money Smart Week. As you know, Money Smart Week is a program created by the Federal Reserve Bank in Chicago, designed to provide financial literacy programming to all Chicagoans. We have certainly had an exciting week of informative discussions with some wonderful experts and leaders and so much great conversation. I don't want you to miss out on it. So even if you were not able to catch it, go to our Facebook page to see the videos. Believe me, so much helpful and impactful information. We spoke about this week the power of banking. We spoke about how to pay for college. And we also had a great conversation about building generational wealth. Well, today, what a hot topic that we have. And speaking about rental and mortgage assistance for Chicago City residents. I'll tell you, I spoke about this just about on every panel this week, and we have had so many questions. This is a hot topic because we all have to live somewhere, right? And so this is certainly a topic that applies to everyone, whether you rent or whether you own or whether you intend to own. And certainly during a pandemic in which more than a half a million people have lost their lives, tens of millions became unemployed and millions more became underemployed. That meant paying for the basics like food and shelter suddenly was something people could no longer take for granted. And this topic in particular is very near and dear to me because when I purchased my first home, well before becoming an elected official, the reason that I was able to purchase my first home was because of mortgage assistance that was available for first time home buyers. And I was an executive in corporate America at the time that I purchased my first home, but the assistance was still needed and appreciated. And so I say that for a reason, and I always share my testimony because people need to understand that this discussion is for everyone. Do not just think that it's for those in certain neighborhoods with certain income levels. And so you can rest assured that this is a topic that affects people all over the city of Chicago. And so we have a great panel today of experts, and we are so happy on today to have Ravi Baichwal, I think I said his name correct, of ABC7 News. You all know Ravi. He is awesome, very well educated, and certainly what a great facilitator that he is. And I enjoy him every day watching him. So we're happy. I'm going to turn it over to him because he certainly does it better than me in facilitating. And I'll let Ravi take it from there.
Treasurer, thank you so much. That is our treasurer in Chicago, Treasurer Conyers Irvin. First of all, this is a very important topic to everybody across the economic spectrum. I want to give you a shout out and your office a shout out for doing this and to help people feel that they can increase their own education about something that is as fundamental as their own finances. And every little bit of information counts, every little bit of insight from different walks of life counts. And this is a tremendous service that you're doing to the city, for the city of Chicago, and for all the folks who are here. And I'm just a real thrilled to be a part of it because certainly as a news person and a former business reporter, I think it's incredibly important, and more importantly, there's a humongous gulf of information out there for people in terms of their own personal education about how they can take control of their finances no matter where they are on the economic spectrum. It only just takes a start, and you're helping to start that. So Treasurer, thank you very much for this opportunity to participate with you and help our great city. So like I said, I'm very happy to be here. It's an urgent topic, and we have experts to help you navigate through this. And again, it's a lifelong learning thing. I'm a lifelong learner when it comes to finances. I'm teaching my kids who are a senior and a freshman in high school about the importance of this topic. So if you're watching here and you feel like you don't know anything, you'll learn something here, and just keep your mind open. Read the Tribune business section, the Sun-Times business section, and listen to the treasurer because she's got some great ideas. We also have great ideas coming from our panelists today, and I want to introduce them to you right now. Donna Clark is with us. She is the Chief Operating Officer of Neighborhood Housing Services of Chicago. Donna, good to see you. And maybe you can
To
give
see
us
you,
a little
Ruby.
update. Yes, thank you so much. And also we're joined by Daniel Hertz, who is the Director of Policy at the Chicago Department of Housing. Daniel, good to see you as well. Thanks so much for your time today.
Thank you so much for having me.
All right, so we're going to pop back and forth, and I encourage everyone to jump in if you have a thought here about what you hear. It's not just going to be a bunch of people making speeches, and we've got some very educated folks here and thoughtful people who can help understand and flesh out these topics. So let's go to our first question. Donna, I'm going to go to you on this one. The fact is, the pandemic, if we can believe it, we know, we get reminded of the news every day. The pandemic has been going on now for more than a year. The job losses were astronomical right off the top. We haven't made back all of them yet, not even by a long shot. And while some people, though, have been able to get back to work and they are paying their bills, they're still out of work, or they're still uneven in terms of their where their wages are coming from. Their cash flow isn't the way it used to be. It's still a week to week, a biweekly to biweekly situation. And for many people, there's an idea that through the last year, the rich have gotten richer, the poor have gotten poorer. We see what's happening in the real estate market. There are bidding wars all over the place. People are moving out to the suburbs and they're just not getting a chance to buy what they want. So Don, I want you to think about that in terms of, tell us what you see as the kind of struggles that people are going on, getting through right now, and give us a sense of where we really are economically in terms of that health here in Chicago.
So, Chicago's this wonderfully diverse city, and you can't really, talk about Chicago until you talk a little bit about the segregation. There's a tale of three cities in Chicago, and the pandemic has really affected the communities differently. Like you said, some have recovered and some have really prospered. And, that's really, those industries that were boosted by the pandemic: housing, of course, financial services, the digital industry. Well, that's great. But then the restaurant and hospitality industry, transportation, healthcare, and, commercial real estate has been devastated. Right. And that affects our communities differently, and their purchasing power. We have to talk about unemployment first. So first of all, Chicago has a higher unemployment. The average unemployment rate is higher than the US average. But then when you kind of look at the individual residents here, so even higher than that is, the Hispanic, the Latino Hispanic community, but the Black community in Chicago has twice the unemployment rate as the average Chicagoan. And so that's kind of where we are. That's why, we're still devastated by, despite the stimulus payments, Chicago's still devastated by, the unemployment rate and the slow recovery. And people are having a hard time, still having a hard time paying their rent, paying their mortgage, paying for essentials like food and medication, or, they're negotiating childcare because the recovery is uneven, and that's, creating an additional cost. So yeah, all the communities are not, truly recovering or didn't, benefit at the same time. But yeah, it's incredible. The housing industry, even on all sides of the city, there's been a lot of activity. But the fact of the matter is that people, the cost is getting so out of range, people can't afford to buy where they would like to live. And so there's a true lack of affordable housing. So people have money. Sometimes it's burning a hole in their pocket, but they can't afford to buy anything out there. So, so that's just unequally, affecting our communities.
So we are not anywhere close to a quote unquote recovery. It's uneven, but it's certainly not anywhere where we were a little more than a year ago, right?
It's, it's very uneven, and the prices are, construction, for instance, costs, they're inching out of reach. They're increasing the price of housing. There's not a
Yeah.
lot of new housing that's affordable that's being built, and particularly on the south and west sides. And I know the city's doing a lot of effort. A lot of community development groups are making a lot of effort to kind of level the playing field. But it's still where an affordable house is $250,000, $300,000, and that's really out of reach. People cannot afford to buy that. And then the other thing too with our communities, particularly with the Black and brown communities, there's not enough down payment assistance to be able to get them into this new affordable price at $250,000 and $300,000.
Incredible, even with today's interest rates. All right, let's hold that thought right there. And with that kind of sketch, that kind of background, let's go to Daniel Hertz. Daniel, someone who can't pay their mortgage in this pandemic, they might be able to work out something with their bank. They might have a relationship there. There have been programs to help those folks, but for renters, they're not nearly so lucky. Now, there was some fairly robust federal eviction protection in the immediate aftermath of the pandemic, and it has been carried on under the Biden administration. But can you tell us what kinds of protections are out there for renters right now, and for folks, frankly, who just can't make ends meet? They are renters. They've been caught up in this, and they're still caught up in this. What help is available to them right now in the middle of April 2021?
Yeah, thanks. This is one of the biggest challenges we've been confronting, and obviously Chicagoans have been confronting since the beginning of the pandemic. And, obviously, even before the pandemic started, in February 2020, there were many, many thousands of Chicagoans, tens of thousands of Chicagoans who were struggling to pay rent, right? So this is not a new problem. It's just become a lot more, it's become worse since the pandemic started. And as Donna said, it has not affected all of our neighborhoods and all of our communities equally. It's tended to exacerbate the inequalities that already existed. So I think one of the things right now that you can do as a renter is just be aware of what your rights are. That's really, really important. So I'm going to start and end with a recommendation that you go to chicago.gov/eviction, which has a sort of a landing page of lots of different resources and rights that tenants have. Also relevant if you're a landlord, if you own a property, a rental property. I think there's some good information there for you as well. I mean, I think one thing to know is that there is still an eviction moratorium at the state level in Illinois. However, it's not a blanket moratorium. So you actually need to qualify for it, and you need to affirmatively tell your landlord that you qualify for it. What that means is your annual income has to be less than $99,000 or $198,000 if you're a married couple who file jointly. You need to be unable to make rent payment due to a COVID-19 related hardship. And you just need to show that eviction would likely lead to you either being homeless or having to double up with another family. And essentially, you can write that out on a statement, sign it, send it to your landlord. And if you do that, you are protected by the eviction moratorium.
Daniel, let me just jump in. How much are people taking up that program?
So, I mean, if you look at the eviction numbers that are coming through, obviously evictions happen through county courts. I mean, they are a small fraction of what they normally would be, but we also know that there are a lot of people who are vulnerable if this moratorium were to end, or once the court system sort of starts kicking back into gear. The Lawyers Committee for Better Housing, which is a nonprofit rent legal assistance organization, estimated that there are as many as 21,000 households, that's not people, but households, families, who are at risk on day one of facing eviction once the moratorium is over. So it is holding some of that back. The other thing that I definitely want to highlight is both the state and the city, it will be opening in early to mid-May really significant direct renter assistance programs that can pay for back rent of up to 12 months for people who have been affected by COVID-19. So I strongly encourage you to check chicago.gov/rent-help, which is the sort of landing page for those programs. Again, they'll be opening up early to mid-May, and I think that'll be a major source of assistance
I think that link has been put up in the chat, folks. If you're watching, copy that link. Is that, just to be clear, is that a grant or is that a loan? Do you have to pay
It
that
is a
back?
grant.
It's
It
a
is a
grant
grant.
for 12
So-
months of rent.
12 months of rent. It can also, the city program will also cover utilities. So I think this is really a major lifeline. We're fortunate it's funded by federal stimulus funds, but administered by the state and the city.
All right, well, that's something we need to highlight, and the treasurer no doubt will be putting that on her website and helping people understand that that is available to them. But let's stay with renters, and Donna, let me go back to you here. Does that tie into what you're trying to do through the neighborhood housing services programs and the kind of help that families can get over there?
So, for renters, we had to expand our bandwidth because of the pandemic. We really revitalized neighborhoods through home ownership, but all bets were off when the pandemic hit, and we were like, NHS was like, how can I help? And so, a lot of our services though translate to renters. We have HUD certified counselors that work with individuals and families to manage their credit. We're trying to get them credit worthy. We're giving them financial, strategies basically to make sure that they don't suffer a negative financial event. We have 2-hour workshops. While we haven't been in the office, we've been counseling people virtually. Via telephone. We in June we started community conversations, so we partnered with the aldermen to talk about financial strategies for both renters and homeowners, such that they would not suffer a negative financial event, because we were concerned that we weren't seeing a lot of people that were coming to us for foreclosure prevention or information, which is another thing that we do, because people were immediately going into forbearance plans, right? And then the renters either just weren't paying their rent, or the city, I gotta give a hand to the city and the state, where they popped up with early renter assistance programs.
Are you satisfied that you're getting to the people though that really need this help? Because we have a question right here. Think about this online. We were just getting a question in here in the chat about this from Roberta Woods asking, look, many folks have great difficulties making these online applications. For example, they're challenged to load up documents that are required. Is there any way that people can get in-person help on this? I know it's the pandemic and everyone's working remotely, but what about that sense? Like, you can just imagine for someone who's has taken care of their families forever and a day, and they maybe have been paycheck to paycheck for 20 years, but they're hardworking, working class folks, and they're not as slick as some people in terms of how to interact in this kind of a form. What about help for folks like that?
Yeah, not an issue. We have a client services team that they can call, and they can sit on the phone, and we can at least get their initial application done. And we have drop-off days, right? We have 3 offices throughout the city on the south and west sides, and they can, and also our central office in Wicker Park, and they can come and drop off their documents as well. We actually stood up a digital desk, so we had somebody that that they could call and help them navigate through a digital platform. So we tried to think about both sides of the equation. There is definitely a digital divide.
Sure.
And
let me ask the treasurer about that. Madam Treasurer, I know you're very aware of this. How do you feel how effective your office has been in terms of trying to ensure these wonderfully thought through programs, these things that come from the heart, that come from the federal government all the way down, that they're getting out to the clients that really need the most?
I think that is a great question, Ravi. As a matter of fact, I think back to the beginning of the pandemic, there were so many resources thrown at residents, federal level, state level, county level, city level. It was so much information that I think that, number one, it was confusing, but also number two, people just did not know where to go. And so one thing that we tried to do here in the treasurer's office, because at the end of the day, I always say that I want to be a resource. And so on our website, we had a one-stop shopping where we said, if you go to our website at chicago-city-treasurer.com, we will be able to direct you to where all of these resources are at. I'm so happy about this statement that Daniel made, that, I mean, even I wasn't completely aware of the date that this will roll out. And
Mhm.
so for Daniel speaking about the city and the state in May, oh, as you mentioned, Ravi, I have a lot of work to do to make certain that residents are aware of this. And I'm going to do what I can do. So we'll have some more workshops coming up. But I think what will be helpful is if we have, to me, when I look at what we're doing today, bringing the experts to you is what we have to do. Because we
Mhm.
can put this information out, but if you can't touch the experts, I don't know how helpful that is.
Yeah, it's always the as Donna's talking about, the digital divide and people being intimidated by how they have to, in a modern way, access this kind of help. But thank you for that, Treasurer. Let's go to Daniel and stick with homeowners right here, Daniel. Um, you know, we've been hearing so much about this housing boom. Apparently there are lines for open houses. People are coming with cash bids for homes. They're paying well over market price, well over asking. It's back to, like, it feels like, you know, oh 05, 06, 07 again a little bit. And tell us about the other side of this story, the people who are going to get locked out of this. And what about the foreclosures maybe that are tying into this part of it as well, that was happening at the beginning of the pandemic? And I want to couch this in the context of one comment here in the chat where Phyllis Coulter says, I would like to buy, but the average purchase price, as Donna mentioned, is $250,000 in the city. That's more than I can afford at this time. Alternatively, as a renter, rents have increased significantly as well. What protection is there for renters who are experiencing these very high rent increases? Maybe you can attack that second, but talk about how this other thing is going on with this burgeoning home buying, essentially craziness that's going on out there.
Yeah, you're right. I mean, I think again, I'm just echoing Donna here over and over again. You know, tale of two, tale of three cities where, right, we have markets in certain areas that are really, really hot, and at the same time, we know many people are hurting. Um, so, and we know that, you know, as with renters, homeowners are definitely in need of support as well. At the Department of Housing, last year, one of our rounds of direct assistance was actually open to both tenants and homeowners.
Mm.
This upcoming round that I just mentioned is going to be specifically for renters, but that will be followed by the federal government has created another round of mortgage assistance programs. So that should be coming um, later on. And then, you know, I do want to emphasize there's other programs, both sort of emergency programs, especially around utilities. Some of the utility companies have created programs. So I would certainly recommend reaching out to them if
Mm.
that's a concern for you. And then programs that, you know, have existed for a while that the city has, and Donna mentioned some of them, the neighborhood lending program, foreclosure prevention and post-purchase housing counseling, um, and things like, you know, emergency heating and small accessible
Sure.
repairs. All of those are things that, you know, people should absolutely try to take advantage of.
Daniel, let's stick with you for just a minute here as we talk about you know, homeowners and what you can do to stay in your house. I mean, at the beginning of all this, the banks were empowered really to help out a lot as the conduit between federal and state assistance and individuals who needed that. But now let's talk about that. How have the banks been doing in terms of dealing with the other creditors that might be involved in here? They were trying before to work out arrangements. They were pretty close to getting those forbearance conversations happening very quickly. But what about now? Have things changed? And what about consumers? How best should they be approaching their bank?
Yeah, I think that, you know, what we hear, and you know, at the city, we have been in touch with banks and lending institutions really from the beginning of the pandemic to talk about, you know, one, what can you do? And two, you know, we need you to step up. We all need everybody to be stepping up who's in a position to be, you know, cutting people some slack and figuring out a way to make this work and keep people in their homes. And I think
As a policy guy, are you satisfied that the banks? I mean, that's so anathema. Let's face it, to how a banker thinks. They
yeah.
got to keep the money flowing in. They got to make sure that they take that the people who owe the money are paying them. I mean, is there any kind of flexibility around that?
Yeah, I mean, I think we have seen a lot of adjustments being made, and I think the thing that we hear over and over again from the banks is, if you are a homeowner in that situation, don't wait to reach out. Do that, as soon as you can, to start that conversation. But ultimately, I think whether it's homeowners, whether it's renters, whether it's landlords, the bottom line is a bunch of people have lost work, they've lost income, and there needs to be money flowing through that through the system. And so that's where I think the funds that the federal government has put in, and that the state and local government and Chicago have put in for direct assistance, to renters and to soon, I think, again, to homeowners, just is really crucial. And
I think we have a job in the media as well to talk more about the success stories of folks who have been helped through this, not to cheerlead for government and politicians, sorry, Treasurer, but just to show people where their tax dollars are going. I think that we haven't done enough of a job of that. And I think those kinds of stories are kind of empowering. So we can do something more on that, certainly from our perspective. But Donna, let me turn to you.
And Ravi, can I
Yes.
just 1 second? Because I think that was an important question from Phyllis about the $250,000 average cost of a home.
Mhm.
I think that in so many cases, because of the poor lending in underserved communities, we have been trained that we cannot afford these mortgages.
Wow.
And I really want to contradict that. And let me tell you why. When I purchased my first home, it was not necessarily a $250,000 purchase, but back then, 10, 15 years ago, it probably would equate to that amount.
Mhm.
I was a single woman. My salary was decent, but it wasn't the best.
Mhm.
And it was the program that was provided to me that I was able to purchase my home. And I think that's what we miss. It's not just the purchase price, it's the interest rate. It's the down payment assistance. Because if it's a great interest rate, Ravi, a
Mhm.
$250,000 house you can get paying a mortgage of $1,400,
Mhm.
$1,500 a month.
Mhm.
What do you mean you can't afford that if you're paying it in rent, right?
And that's those kinds of interest rates, just as a rule of thumb, folks, and you can generally quote me on this, and maybe Daniel can correct me, but I mean, on $100,000 at 5%, you're paying about $500 a month. So interest rates are a lot lower than that. So if you're talking
Yes.
a $250,000 home at 5%, you're talking $1,250, $1,300 a month, and it's even less than that. Now, we can't continue to hope that interest rates are always going to be around 3 or 4%, but if you look at the markets, there doesn't seem to be all that much sense that interest rates are going to be going up a huge
Yeah,
amount.
I think they're going to
Yes.
hold for, definitely another couple years, and they're pretty low if you can qualify for them.
If you can
And
qualify.
I gotta say, you have to do your homework.
Mhm.
There is down payment assistance out there that makes this home ownership real, right? And you can layer the down payment assistance. So you have to do the research or work with somebody, work with NHS,
Right.
where we have down payment assistance. I've seen people get up to $50,000 in
Wow.
down payment assistance by layering programs, which makes homeownership real for these folks.
That is the American dream, and that's all of us pulling together. I love it. Thank you so much. Now, Don, let me stick with you and I just want a quick reminder for our audience that you can put your questions in the Q&A box at the bottom of your screen, and we'll see them, and we're going to get to questions that you have. I'm trying to integrate them as well as we talk today. So if you have questions, just jot them down in that box right there. But Donna, let's go back to the homeowner who is facing a dire situation right now, the worst situation. They've discovered that the bank has already begun foreclosure process on them. What do you do? What can they do? How do they get help from the city?
So from the city, first of all, for us, we have a foreclosure, prevention and intervention services. So we'll work with you. We'll look at your situation and try to get you a loan modification, right? If you can't afford to, refinance and lower your rate. Definitely talk to your bank. Do not suffer in silence. So just keep on them and keep trying to talk to them. Get into a forbearance plan as quickly as possible. I mean, this foreclosure process takes a long time. It takes 12 to 15 months. But it's you got to move quickly, because the forbearance, you can get 3 months to up to a year in a deferral. So So, that's helpful to keep you in that home. There are other things that you also have to do and that you have to be aggressive about. So we, for instance, sit with the potential homeowner and do a housing cost analysis. So thinking about in their current situation, how can we lower their costs?
Mhm.
And that's, principal, interest, taxes, insurance, energy costs. All of a sudden, you're saving them a lot of money per month, which can make a difference between them staying in the home and not
And,
staying in the home.
and very quickly, the baseline qualification for these kinds of programs and income levels, or what are we talking about here?
So for us, we'll see anybody at any income level. We will work with anybody. So we don't, obviously we're targeting people that are generally 80% of AMI and below, but NHS will work with anybody.
Can you repeat that and explain what that is again? Generally, you're targeting who?
The residents that have an income of the 80% of the area median income.
Okay.
And so it depends on how many people are in your household.
Okay.
And so there are charts that come out every year
Okay.
and that's, actually a critical chart that you should look at, because a lot of these programs, these assistance programs are, they require us to do income verification to see that, to make sure that you're eligible for the program. But yeah, we will sit down and work with anybody, because our goal again is to keep them out of having a negative financial event, keep them credit worthy, and make sure that they're mortgage ready if they're ready to buy a home, or that they stay in their home.
Sure. Let's keep with that idea. Just and I invite you all to jump in on this. And I don't want to get into the heavy duty bank bashing or anything like that. But the fact is that we all know that a year ago in Chicago, for sure, that the banks really did come under fire, especially last summer, for their relatively poor track records in Black and brown communities in terms of lending, in terms of equity, in terms of reaching out, in terms of trying to get the American dream to happen in these neighborhoods. And we all know about the roles that systemic racism has played. It's been quite well acknowledged in the banking industry, and there are federal laws that govern that kind of thing now. But is there any indication to any of you that the solutions to homeowners' current problems in this context are being handled more equitably? And maybe I'll start with the treasurer on this, and then Dawn, I'll go to you.
So this was a topic that John Rogers and I spoke about last night. We had a fireside chat. John Rogers of Ariel Investments. We spoke about building generational wealth. And as a matter of fact, Samantha Chapman facilitated that. And she asked us a question as Black people, because the reason that she asked us this question is because of a WBEZ report that came out last year at the height of the pandemic. And it indicated that one white neighborhood in Chicago, lending that was provided to one white neighborhood was more than all Black neighborhoods combined.
Wow.
So compelling. And so a lot of people have been asking the question, in the height of this pandemic, the awareness of racial injustices, how it being Black now seems more popular, because it seems like so many programs, and you mentioned this, Ravi, in your question introduction when you stated, so many banks are doing more now, it seems like, with programs that are available. Yeah. And my response to that question last night was, one thing that I have noticed with the banking institutions, because that's your question, there are programs where they are providing money to the programs, right? Billions of dollars, as a matter of fact. Yeah. But what good is that if you're not giving me a mortgage? That money is just sitting in a pot. And so I think that these are steps, and these are necessary steps, but where I would like to see it, Ravi, to be real change for equity, is equity in providing these mortgages. Black and brown must have the same opportunities as whites to be able to receive a mortgage.
Donna?
So, I agree. If you're not changing the underlying structure, if you're not addressing the systemic issues, and granted, it's going to take a while, right? And it might not work from them from a business standpoint. But we've heard a lot of verbal commitments. I've sat on a lot of listening roundtables. So, I'm encouraged, but it's slow. But it's like, trying to drain a pool with a garden hose. If you can throw billions of dollars at it, but if you're not changing the system and getting more, getting more people through and providing more mortgages, lowering those denial rates for no really, sound reason, then, it's not really going to change the issue. We can look at the HMDA data in, 2021, and we're not going to see it.
Maybe one little victory at a time starts to change that. There's an interesting comment here from a Jay Harding on the chat, which gets us to the issue of property tax reform, which I'll bring back in here as well. And Daniel, I invite you to jump in on this, but this person says, I'm sorry, I don't know if it's a man or a woman, or so my rate is 3.65%, excellent credit. I qualified for a lower rate, but my debt ratio was too high because of my property taxes. So hashtag out of Illinois. This is someone in the 6400 block of North Dorchester. So they put their of Dorchester, I should say. They put their address in there. I just throw that out there as the kind of puzzle that people are trying to solve here. Property tax reform, Treasurer, is something that has been talked about here forever. I know that the mayor has been very reluctant to even say that she would ever raise taxes, but we're in a situation where it might happen just because of the pandemic. What are your thoughts around property tax reform and how they can address some of these systemic bias issues? And Daniel, why don't we start with you, and then we'll go to the Treasurer.
Yeah, I mean, obviously for any property owner, property taxes are a huge issue. I think we've seen a lot of work and some change on the horizon with the new county assessor's office working to amend some of the things that, if you recall a few years ago, the Chicago Tribune did a big investigation showing that there were huge inequities in assessment practices that led to unfair tax burdens, especially on low and moderate income folks, and especially Black and brown homeowners across the city. So, that's something that's happening. At the city level, I think one of the ways that we have looked to address the property tax issue, and this is something that really is going to be helpful for some people, not an appropriate solution for others, but we have something called the Chicago Community Land Trust and something called the opt-in program. And essentially what that does is you can, if you're a homeowner, put your property in what's the Chicago Community Land Trust. You continue to be the owner, you continue to live there as long as you want. But what it does is it says that there's going to be some restriction when you eventually sell on the sales price. And it's going to essentially become a lower moderate income property, really a moderate income property going forward. But number one, you can get $30,000 in home repair grants if you do that. And number two, your property taxes will be calculated based on the affordable sales price. And I think that's especially for people who have lived in their home for decades, don't want to go anywhere, but maybe they're seeing property values rise around them, and they're saying, look, I'm not trying to cash out of this right now. I just want to be able to make my monthly payments, make my taxes.
See much take up in these programs?
So that's a relatively new program. It was actually created just before the pandemic hit. So we have seen a little bit, but that's definitely something we're trying to get the word out more about and find people. Again, understand that's not going to be a program for everybody, but for people for whom it does make sense, I think that is a lifeline.
The Treasurer, do you have a thought about that and what the context of all this?
One thing in my life that I've learned, and my mother taught me this at a young age, I work on what I know that I can change. Things that I cannot change, I have learned to deal with it the best way that I can. So let me talk about this, because I think that's a loaded question from Jay Harding, and I think it's a great question. And let me tell you why. Number one, Jay is approaching it from the property tax perspective, and I think Daniel did a great job in providing an answer for that. We as a city of Chicago, and mind you, the decision on property taxes is between the mayor and the city council. But as the treasurer, where I can come in, because we talk about money is leverage. And so I have the leverage of $8.5 billion of taxpayers' money, right? So I have that leverage to be able to advocate on your behalf with the banking institution. So I want to talk about the other half of Jay's question, which is talking about debt to income ratio. This is why I lay so heavy on banks. Matter of fact, State Treasurer Michael Ferrix and I don't know if you've heard this, Ravi, because we just started this a year ago on Juneteenth, where because of the WBEZ report, we formed an advancing equity and banking commission where we want to talk about equity lending from banking institutions. Jay Harding, see, banks will tell us that our debt to income ratio is too high to refinance. When we just spoke about a moment ago, rates are so low that if you refinance your home, you will be able to have extra money in your pocket because you are refinancing at a lower rate, but they'll tell you that your debt to income is too low. Let me tell you this, and where my argument with the banks is, this is what we're talking about in providing opportunities for lending. When I purchased my home, don't tell me what can't be done because I know firsthand. Again, well before I was an elected official, I spoke about assistance for the first-time home buyers. But guess what else that program did, Ravi? It was forgiving to my debt to income ratio. What does that mean? So there, if you provide a book, a bank, right, they come to us and they say, well, according to the book and according to the rules, you don't qualify for this great loan with this great interest rate. And so you're thinking, well, I'm the one, if I don't have the higher income, I'm the one that need this program, right? And so when I purchased my home, they had a program that was specific to people like me, just like Jay, that had a higher debt to income ratio, but they were forgiving. And so that meant that they put me in that program. And guess what? I still own the home today. So don't tell me that I can't afford this mortgage, this refinance because of my debt to income ratio. And so what I want to do, Ravi, I want to change the mindset of what we're being told. That's why I negated the 250,000 home we can't afford. Yes, we can. That's why I negate the debt to income and refinancing. It's all about, as Donna mentioned, the parameters. You have to lay on these banking institutions. They can do it. All we're asking for is to take a little risk. That's all we're asking. And then you may
risk with other people's money, our tax dollars. I mean, that's where the risk is being underwritten.
Yes.
So there's no question.
Absolutely right.
I mean, we're sharing the risk across 340 million Americans, really, when you think about it. These numbers that the Biden administration, and I'm not taking sides here, but these numbers that underline the support, the programs that are out there are really astronomical. Like, write out the number 1 trillion on a piece of paper and you'll see. And that money is flowing through these operators, banks, and financial institutions that have essentially an obligation to, as you say, be flexible about some of the rules without bending them. Because look at you got a leg up, you got an opportunity, and that was however many years ago, and now you're where you're at, and that's a story that can be repeated over and over and over again when we truly are all in it together. There is one question here, Treasurer, on that note, and maybe someone can clear this up. That's also from Mr. or Ms. Harding. Can you use the money from the federal government to reduce property taxes? That program cuts into future wealth because it limits the selling price of the home. Very, very interesting point.
Yeah, it is. And it's a great question to help us as residents. And by the way, this was a question that even I had a meeting with some of the members of City Council, and they asked me that question, wanted me to analyze, is this possible, the federal money that's coming in, what the city is able to do with it. And just to let you know, Jay, and all the residents that are listening, these are conversations that currently the mayor and city council are having because they want to determine what they're going to do with these federal dollars. And certainly I know that obviously whatever they can do to try to help residents, I'm sure they are, but that is a hot topic. And I know that is current conversation right now. So what I would tell residents, great questions, please tap into your local alderman, tap into them, even the mayor's office. You can send emails, you can call, be able to provide your thoughts to let people know what you're thinking.
This ties into the Treasurer, this ties into the big politics around this, right? Which was stopped essentially by the previous administration, or not to take sides, but just that there's a thought process out there that says all this kind of assistance to states and cities that vote one way versus the other way is really just sopping up bad management. And we know, generally speaking, that that's way too simplified a way of looking at this kind of thing. But that's a political question, isn't it? To see if all these kinds of assistance dollars can go to right at some of these systemic issues around property taxes that are too high. In fact, one comment here on the chat is about why are property taxes so high on the west side? Why is that? How can that be? I mean, is this part of that context, that kind of a?
I'll tell you, I live on the west side, so I know firsthand. And my husband and I, we understand, right? We're not getting any leverage. We have to pay property taxes as well. But this is one thing I do want to say about property taxes, because I don't know if everyone is taking advantage of the appeals process. And Daniel kind of hinted to this with the county assessor. You have to appeal your property taxes. Even when you receive that bill and you're thinking, it doesn't matter, because a lot of people think if they're not seniors, that there's no purpose in them appealing it. Seniors have the exemptions, but you'll be surprised at how your home may be overvalued. You should appeal your property taxes every single time. And I'm like you, sometimes I think as a homeowner, why do I have to keep appealing it? Don't you have the same, information from the last time? You'll be amazed. You have to appeal it every single time.
I have to tell you, Treasurer, that, my wife and I, we moved here to Chicago from Toronto, Canada. So we're from Canada, American citizens, and now proud to be here in Chicago 15 years ago. And I have to tell you that whole property tax game, if you will, was incredibly, I couldn't believe that this is the way the system works and that you have to play this game. But I came to the realization, I have to do this, and I do this, and I encourage everybody to open those letters you get from all those lawyers and all the rest of it, because the system is there, and people would argue, well, this encourages democratic participation. I think it's kind of weird, but at any rate, do something about your property taxes by fighting them. Treasurer, let me move to Daniel, because I know, Daniel, your time is a little bit tight here. Let's talk a little bit about business property, and others, folks, please jump in here as you need to. As we all know, thousands of small businesses were having to shut their doors forever. I work down in the Loop. I cannot tell you how many plywood coverings of windows there are still as a result of all this. This was a year ago. Many are just hanging on just barely. What about the same rules for small business owners in terms of the rent that they pay to their commercial landlords? Are there any protections for them? And how does that help other people with affordability? Daniel.
Yeah, thanks. We haven't seen, in terms of like the moratoriums, the same kinds of policy coming onto commercial properties. There have been programs like the Paycheck Protection Program and other resources that have been created. What I would really encourage is, go to the City Department of Business Affairs and Consumer Protection. Go to chicago.gov/coronavirus, and the latest information about resources and rights will be up there. But yeah, absolutely, that's another really challenging piece, and it's important because it's ultimately all connected, right? If the businesses can't stay open, then that's even more people who aren't getting paychecks and more rent checks and mortgage checks that are going to be hard to write as well.
One thing we can say is that because there was a fairly robust federal response at the beginning under the Trump administration, and a response that has been carried on and accelerated under the Biden administration. One thing I've read a lot about is that the destruction that we were all worried about, the absolute destruction to the economy, not just short-term loss of jobs and so on, but that destruction hasn't happened at the same level that we might have worried it was going to happen. And that is, again, an example of, I hate to use the term Keynesian economics, being able to flood the market with some money at times of need so that you get through these times. How satisfied are you that what we have done over the last year and a half now nearly, was the right level of a policy response to be able to deal with avoiding destruction?
Yeah, I mean, really quickly, I would say, when you think back to mid-March of last year, and we were seeing, in the span of a week, the level of unemployment claims that we saw in the entirety of the Great Recession, the level of catastrophe that we could have been facing was unimaginable. Obviously, we are still facing a catastrophe, and it's still a crisis for many, many people. But I do think the difference between it's sort of hard to believe, but the difference between where we are and where we could have been is so much worse. That said, I think there's clearly many, many millions of people across the country and here in Chicago who are still in crisis. And I think that the challenge has been making sure that all of the resources that exist get to the people who need them the most, and tearing
Yeah.
down or scrambling over or doing whatever necessary to get over the barriers. I mean, we talked about some of them, even things as simple, right, as like having to upload a document on an online
Absolutely.
application, right? I mean,
Absolutely.
that's often the barrier, or a language barrier, or
Oh,
just
yeah.
knowing where to go. And so
Sure.
that's, I think, what we're really working towards with this upcoming round of rental assistance.
All right, you're gonna have to go in just a quick second, so I'm gonna give you a chance to answer this first, but this is to you and Donna. We're gonna go into the Q&A real quick here because we've got lots of questions, but we're running out of time as we come up on 1 o'clock. But before you go, what is the best, this is Daniel, and then Donna, I want you to answer this as well, but what is the best advice you can give to someone who's having trouble paying for their shelter right now, whether it is rented or it is owned? Daniel.
Yeah, I mean, in two sentences, I think if you own your home, call your bank. We've said it a bunch of times today, but call your bank, let them know, and really try to see if you can work some sort of forbearance out. If you're a renter, send your landlord that notice. You can go to chicago.gov/eviction and see an example. Send your landlord a notice that you qualify, if you do, for the eviction moratorium, and check back at the city and state, as we get into May for the application for rental assistance.
All right, Daniel Hertz, thank you so much for your time. Again, the Director of Policy for the Chicago Department of Housing. Continued success. We'll be watching your work. And I want to thank you very much. But Donna, let me go to you here. What's your answer to that? What is the thing that people need to know the most if they're facing trouble in terms of keeping shelter over their head, whether they're an owner or they are a renter?
So I'm going to plug your community development organization. Find one, because they work hard for you. If your bank doesn't answer the phone, your community development organization is going to be your advocate. They have services. They have, they have a network where we all can work together, including with the city and the state. And so they will know where the resources are for you and how you use them to stabilize your housing situation.
So Donna, let me, on that note, let's go to the Q&A now. I'm going to try to get in a few more questions and stuff that have come in on the chat here. I've been trying to integrate them as we go along here. But Donna, what would you do? This comes from Megan Deckings, who asked, what would you do? How would you advise tenants who've really, had a negative relationship or experiences with their landlord? They might feel very nervous to send them that letter to qualify for some abatement on their rent, especially when an eviction is in the offing. What do you say to them? Does the letter need to be sent to anyone besides the landlord to legally protect them during that time? And also, is there any timeline for needing to submit this letter before being at risk of eviction?
So I would, I think the thing that you want to do is actually visit a legal aid person, and that they can advise you as to, what you should do if that relationship is bad. Because, whether they are, I've seen landlords that have, 43 floors and just, in own luxury buildings, to the 2 to 4 unit landlord. And it is about, trying to have that conversation before it gets to housing court, before it gets legal, right? Because it doesn't benefit either party. Because the landlord's going to have to turn over the units. That's a cost, or it's going to, remain vacant, or like I said, the eviction process is so long, and obviously it doesn't, it also doesn't benefit the renter at all. So it's beneficial that you keep trying to negotiate that relationship. With the programs coming up, the subsidy is going to go to the landlord, but if the landlord's being unresponsive, then we can work directly with the tenant to just try to stabilize their house.
Treasurer, do you have a thought about that for folks who are listening now and might be intimidated by dealing with their landlord?
I think that there are so many protections for tenants. I will hope that they do not feel intimidated, but if they do, I think the main thing is to follow the process. And when you follow the process, it protects you as a tenant. But there are so many, even beyond this pandemic, through the state legislature, you need to really look at tenants' rights through the legislature, through the city's ordinances. There is so much protection for tenants. I will hope that if there is any challenges that, I mean, you talk about these community development organizations, Donna, I was more interested in that. And I was thinking, how could we put that in the chat? But I think that is key.
It's 1 o'clock.
Feel a resource to go to.
Sorry, go
And
ahead,
that's
Donna.
the thing, we build that network. So it's either, we're dealing with a legal aid organization, but, here at NHS, we are actually looking at, transitioning some of our counseling services to be able to advocate for the tenant as well and help them in with that, negotiation or that conversation.
I think, there's a great comment here from a Sharita Childs. Thanks very much in our chat saying that in terms of this dealing with your landlord, definitely call before you get behind. I find that this seems to be a better approach. Never wait for the collection letter or past 30 days or past 60 days to have that conversation. So get that conversation started early and don't be intimidated, right?
Right.
Let's go to some questions now. Again, this might be a little bit around in terms of some of the stuff we've already talked about. Roberta Wood, who's been listening in for quite a while, says, I work with the member assistance team of Unite Here, Local 1, and some of our members have run into problems working with their banks. They get the runaround, they get no calls. Can any of your agencies put pressure on them to be more cooperative? Let's go to the treasurer on that.
Yeah, that's what we do every day, right? That's the story of my life. I have to put pressure on the banks every single day. But guess what? It's my pleasure.
Do you get a sense they're listening though, treasurer?
You know what? Sometimes, so this is what banks
Sounds
do,
like one of these.
Yeah.
Oh, yeah, okay.
Banks tend to, sometimes, and that's one thing I'll say what separates a politician from an elected official. A politician, you can ask them a question, they answer how they want to answer, right? Not necessarily the answer that question that you were asking. And sometimes the banks do us the same way. While we ask for one thing, as I mentioned earlier in the example of, I need you to lend to Black and Brown, they'll come back with the response of, but we gave $5 billion to these programs. And it's like, well, what does that mean if there is no lending? And so sometimes it is a barrier because banks do what's comfortable, right? They'll push a little bit, but they're going to do what's comfortable. And they're going to weigh their options. And they may say, well, we can give up $5 billion, but what we cannot do is lend more, right, to the neighborhoods that you're asking for, which is what I'm pushing on. And so that's daily.
But that's what that money's for. That's the money that we've all put into the federal government that President Biden is making available. It's not even, am I missing something here? Like,
No, you're not.
you're just the administrator essentially, right?
That's right. But I think that if we approach it that way, Ravi, of this is our money and this is what we are demanding that you do with our money. And I also think residents need to know that there are other options. Donna, I don't know if you mentioned this, but you and I were talking before this recording began about CDFIs. Did you talk a little about that?
So yeah, CDFI, for folks that aren't familiar with it, it's a community development financial institution. And they get funding from the Treasury or from some, different organizations. We do our own fundraising as well. We used to have a proprietary vehicle where we actually got money from the banks to create a flexible, lending product where it wasn't risk-based. It was a uniform interest rate, right?
Huh.
And that would get people in homes. And so, and it's taking that money, whether it's, taking $10 million and being able to turn that over 8 times and develop, products for the market that you serve.
Mm.
And so, like, yeah, the CDFI is just, these CDFIs can be very, very flexible. And that's another alternative than going to the banks, because I get calls every day where they're like, I called my bank and they said, you need 20% down. Well, guess what? We offer 3% down, no PMI, and we're giving you down payment assistance. 62% of our people that come to us, walk out of here with subsidy to and get into a home. So there are definitely different alternatives. There are there are mortgage brokers, but you have to watch the interest rate, because I think when, a lot of banks aren't even lending, they're letting the mortgage, brokers lend, and then they're just buying the loan on the secondary market, getting their CRA credit, and they're done. And the system does not change. This is what creates the systemic issues, keeps people out of the market. And, back of the envelope, we're talking almost $1 billion in Chicago of revenue that we're not seeing, economic development, because the banks are being lazy and they're, not trying hard to develop the products that people need to get them into homes.
Talk to me about a client that has come maybe to see you or one of your staff, Donna, who is presented with this information that says, your dream is possible, as opposed to going to the bank and the bank saying, well, this interest rate is here and you don't qualify. And that little sketch that you just made a moment ago, you've got all these other programs. What have you seen someone's eyes pop open? Like, what? Tell me a story.
Some of them, they're excited, where, a lot of the folks that come directly to us, they're probably a year away from buying a home. And so, we're there to hold their hand and counsel them. And yeah, they're excited because they just didn't think it was possible. And then when you sit down with them and talk about, this is how we get you into that home that you want. Our issue right now is it's really about inventory.
Mm.
And so, we've got people at the ready. Our classes, once we had to transition our classes online, the attendance at our classes went up threefold. So people really want to buy a home, and it's really about finding them the inventory, that's where they don't have to do too much rehab, because that's the space that they're in right now. And, and just getting the right product, because it's like you save them so much money, not only now, but in the future, because they're trading, when they're going to these other banks or getting high interest rate loans, they're trading opportunities. That could mean starting a business. That could mean sending your kid to school. That, it really impacts them over 30 years. It's unfortunate to see the amount of money that they've forgone because they have, higher interest loans, or they weren't able to buy a house.
Yeah.
But that house is, it means generational wealth. It can really change the trajectory of a family.
Yeah, and that is that opportunity cost, as you talk about that. Do you have a thought about that, Treasurer?
I cannot stress enough, and I said this last night in my chat with John Rogers, building generational wealth in the simplest form is purchasing your own home, in the simplest form. There was an article the end of last year in Washington Post, and it spoke about a home purchase was a lifetime, and I'm not quoting the title of the article correctly, but a single home purchase was a lifetime of wealth for the family. And it spoke about a Black widowed woman that purchased a home. And that home, because of that purchase, carried over into the lives of her children. And I'll say this, and I speak all the time about my personal testimony, and I do this on purpose, Ravi, because I am a Chicago native. And I always say that I am an anomaly as an elected official, because I am a true Chicagoan in that I am born in Inglewood, raised on the West Side by a single mother of 3 girls. I know firsthand the struggles, and I also know what the possibilities are. And so I don't want people in our communities to think that this doesn't apply to them. You can purchase your own home. Let me tell you this. My mother was a single mother, a union worker. We just heard from Roberta of Unite here. Thank you for your service. My mother was a union worker and she purchased her own home. And because of what I witnessed her do, I didn't move out of my mother's home until I purchased my own home. And I purchased my home as a single woman as well before I was even married.
That runs in the Indian community as well. That's incredible. My dad used to always say, why are you spending your money like this? Like, just save, stay here. And then when you have enough money, go and, do the next thing, and then build that generational wealth. You can do your own thing. And it's funny how we can tap into cultural practices that actually help with this kind of set of choices.
Yes.
And I think you're right. It is cultural, and that's what that we need to address in our financial education and all of our education. So, our communities know that it's possible. They don't even think it's possible.
That's the thing. That's why we're trying to talk about empowerment. That's why I want to, again, say thank you to the treasurer for putting together this series of talks and allowing us to be a part of it, because that is the idea that the sense that of optimism should be around it. When you've got trillions of dollars flowing from Washington, D.C. all the way down there, it has to help. And to that extent, we've already sort of talked about this, but there's a nice question here from Harlette, Washington. And maybe Donna, you can walk us through this again. We talked about the layering. She says, please explain more about the layering programs for down payment assistance. Is this through the lenders, through the government? Just give us a sense of how that kind of works.
So you could go to any bank, and some of them have different products that might offer down payment assistance. Even the state, so they might offer $6,000 of down payment or purchase assistance or closing costs. But then there might be another grant out there. So for instance, a couple of years ago, Wells Fargo and NeighborWorks had their neighborhood lift program. And that offered $15,000 in down payment assistance. So they could have taken that $15,000 and put it on top of, their lenders' down payment assistance. And so all of a sudden you have $21,000. So
that's nearly 10%. That's nearly 10% of that $250,000 house.
Exactly. And this is the way it then becomes possible, right? We also have, like I said, the city, we work a lot with the city. They have a neighborhood lending program. And depending upon your income, we can give anywhere from up to, $20,000 in purchase assistance, depending upon your need. And we're going out to private sources, just, creating those relationships with those companies that want to do good or that have that focus on, racial and social justice. And they're like, here's a donation. What are you going to do with it? I want you to create homeowners. And we can create our own a flexible down payment assistance program to layer with, and with whether it's our loan or somebody else's loan because our focus is getting people in a home.
One last question I think we've got here before we have to start to wrap this up at 1:15. A lot of people are reaching the end of their forbearance. Roberta Wood, again, writing, I guess, from Unite. A lot of folks are reaching the end of their forbearances. They're still not, however, back at work. Do you know if there will be any kind of extension on forbearance?
Oh, I can't answer that. I'm not sure if there is, but I worry about people coming off of forbearance and not, being, either not having a job and not being prepared for that. And so, look, there's $50 billion in home, home purchase or home mortgage assistance. And so, and it's coming out in 3 tranches. So really try to take advantage of that if you're, rolling off of forbearance plans. But that's something that, we can definitely talk to. We have great relationship with Freddie Mac, and we can talk to them about, and then also talk to Ida and see if we can advocate for them.
Okay, one last comment here, if we can get both of you to comment on this. This will make you feel, this is interesting. I'm a single mother of two, work in the medical field, and I have lupus, and NHS helped me purchase my first home in 2017. Best decision in my life was to try to buy a home. It can be done, right, Treasurer?
I know for a fact it can be done. I am a living witness that it can be done. And my mother, my single mother, God bless, God rest her soul now, she is a witness that it can be done. Thank you, Christina.
All
And
right.
what this is about, Ravi, and I want to say this before we close, I really appreciate you moderating this panel, because I think obviously ABC7 is our #1 station. And so we see you all on TV all the time, and to see you outside the normal view, and people can see that you are a part of a segment that is so important. I think that it matters a lot. I think that it's influential. And so I really thank you and all of the other partners at ABC7 that really worked with us on this week. These are just important topics to really help our residents.
Well, thank you very much for those generous comments. And with that, I mean, we've gotten through a lot of questions and a lot of commentary, both internal and outside. And I'm really glad that, Donna, that you were able to re-explain that layering program, because I layering strategy, really, I never thought of it like that, because you often realize, when you get a coupon for something, that means that you can't take advantage of that coupon over here, just one per customer. But there's so much help that's out there. And I think with that, we've got the message out there in terms of generational wealth and so on. And I want to say thank you for letting me be a part of this. And we're going to continue to do those stories. We're going to continue to do the stories of not just that, there may be some malfeasance in terms of the way some operators work in all this, but there are a lot of great stories out there, and we want to help tell those. So I want to thank you. And with that, the Treasurer, I'll turn it back over to you.
Don't forget to visit ChicagoCityTreasurer.com/Money Smart Week to be a part of our closeout tomorrow. Thank you, Ravi, again, Donna and Daniel. This was awesome, a very important topic, and this is just the beginning. We'll have more.
Thank you. Thank you for the invite, Treasurer. And thank you, Ravi.
Thank you, everyone.
And remember, reach out to us. There's a lot of assistance coming in May, so keep your eyes open, and definitely check the state, the city, and your community development organization and NHSchicago.org.
And I will tell you, also get the vaccine. Do you want to say anything, Treasurer, about the vaccine? Real quick.
Oh my gosh.
Get the vaccine.
Please get the vaccine. You all cannot be like this forever. Please get the vaccine.
Yeah, we're going to have a great summer. All right. Thank you, everyone. I appreciate it. And great to be with all of you. And I'll turn it back over to Spina and whoever was running this. And I appreciate everything and look forward to seeing you on TV.
Thank you again, Ravi.
Thanks, Treasurer. Nice to talk to you. Thanks, Donna. Nice to work with you. We'll do some stories.